Everyone thinks the fall of the petrodollar began with geopolitics, that it was about wars, sanctions, or the rise of new alliances. But the truth is, this crisis didn't start with bombs or speeches. It started with balance sheets. Quietly, mathematically, in the places where numbers stopped adding up long before anyone noticed. You hear commentators say the dollar is losing its dominance, but what does that actually mean? The dollar is still printed by the most powerful central bank in history. It still fuels global trade. It still backs the biggest military. Yet in 2025, something feels different, as if the machine is still running, but the engine underneath is misfiring. Because this time, the problem isn't supply or politics. It's trust. Half a century ago in 1974, the United States made a silent deal with Saudi Arabia. Oil would be sold only in dollars. In return, America would protect the kingdom, militarily and financially. That was the foundation of the petrodollar. It turned crude oil into liquid money and made demand for dollars infinite. For decades, every barrel of oil sold in the world meant someone, somewhere, needed U.S. currency. It was genius. It was empire disguised as economics. But in 2025, something unprecedented happened. Major oil exporters, from Saudi Arabia to the UAE, began signing energy contracts in yuan, rupees, and even digital currencies backed by gold. Officially, they called it diversification. Unofficially, it was an escape hatch. Because holding dollars no longer felt like safety. It felt like exposure. The same weaponized finance that once enforced global stability now scared its own allies. The paradox is brutal. The more the U.S. used the dollar to project power, freezing reserves, sanctioning nations, pressuring central banks, the less neutral the dollar became. The global reserve currency became a geopolitical flag, and flags don't back trade, they divide it. Look closely and you see it's not a new story. Every monetary empire eventually reaches this stage. Spain did it with silver in the 1600s. Britain did it with sterling in the 1930s. Each believed their currency's supremacy was eternal, until math and overreach said otherwise. The petrodollar is now walking that same path, not collapsing overnight, but eroding from within. What triggered the current shock wasn't one big decision. It was the accumulation of small, rational moves by many nations that stopped trusting the same game. When oil producers realized they were earning paper claims while buying real assets from others, the equation flipped. You can't fuel an economy forever on promises, especially when those promises are printed faster than barrels are pumped. The official narrative says this shift is about de-dollarization. The hidden reality is deeper. It's about energy no longer flowing through the same monetary arteries, about the world quietly rewriting who gets to issue the global IOU. And once that changes, everything else, trade, debt, empires, follows. If you're hearing this in 2025, understand this. What's breaking now isn't just a currency system. It's the trust contract that made it work. And when trust cracks, even the strongest money bleeds. If this opened another side of history for you, comment where you're watching from. To understand the meltdown of 2025, we have to go back to the moment when oil became the bloodstream of the global financial system. It was 1974. The Vietnam War had drained the U.S. Treasury. Inflation was roaring, gold reserves were evaporating, and the dollar, once as good as gold, had been severed from metal by Nixon's decree in 1971. The world suddenly faced a terrifying question. If dollars were no longer backed by gold, why should anyone hold them? The answer came not from economists, but from a deal made in secret between Washington and Riyadh. Henry Kissinger, the U.S. Secretary of State, flew to Saudi Arabia with an offer that changed the 20th century. Price all oil exports in U.S. dollars, invest the proceeds in American government bonds, and in return, America would guarantee the protection of the Saudi regime. That was the birth of the petrodollar system, a quiet pact that replaced gold with oil as the foundation of global value. From that moment, every country that wanted energy needed dollars first. Japan, Germany, India, Brazil, all had to sell goods, labor, or resources in exchange for the US currency before they could buy a single barrel. The dollar became not just money, but a toll gate. America printed the tickets. The world had to play the game. But this wasn't just about currency. It was about power recycling itself. The dollars earned by oil exporters, the so-called petrodollars, didn't stay in Riyadh or Kuwait City. They flowed back into US banks and Treasury bonds. Citibank, Chase, and later JP Morgan became the pipelines of this hidden circuit. Oil sold in the East became debt purchased in the West. The cycle was perfect. Energy left the deserts, money returned to Wall Street, and the circle of dependence closed. Through the 1970s and 80s, the system expanded like a living organism. Western banks recycled oil profits into loans for developing countries, Latin America, Africa, the Middle East, creating a wave of petrodollar lending. It looked like generosity, but it was leverage disguised as aid. Nations borrowed in dollars to buy oil, then had to export more goods just to service the debt. When the interest rates spiked under Paul Volcker in 1979, the trap snapped shut. The so-called Third World debt crisis wasn't a moral failure. It was arithmetic. The natural consequence of a system where one nation prints the world's medium of exchange and everyone else must earn it. Behind every barrel of oil lay an invisible promise that the U.S. Treasury would always honor its debts and that oil producers would always prefer Treasury bonds over gold, euros, or yuan. This unwritten contract became the invisible empire of modern times. No colonies, no armies of administrators, just a web of payments and promises stretching from the Gulf to the Federal Reserve. It worked because everyone needed it to work. Saudi Arabia needed U.S. protection. America needed global demand for its currency. The world needed oil priced in something stable. It was mutual illusion masquerading as order. A system not built on fairness but on inertia, the most powerful economic force of all. The architecture was brilliant in its simplicity. 1. The U.S. guarantees security. 2. Oil is priced in dollars. 3. Surplus dollars return as U.S. investments. 4. The dollar remains strong because it is needed to buy oil. 5. The cycle repeats. This feedback loop of debt, defense, and demand created not just a currency system, but a world order. And yet every empire built on energy and credit carries the same seed of decay. When the issuer of money starts consuming more than it produces, the balance breaks. The petrodollar turned America from a producer into the ultimate consumer, paying for goods and oil with claims on its own future. It was the most profitable illusion in economic history. If you understand that, you see why 2025 was inevitable. No empire collapses when it runs out of weapons. It collapses when it runs out of trust. And the petrodollar, the golden chain linking oil to paper, was always held together by nothing more than belief. If this helped you see the system behind the headlines, tell me where in the world you're watching from. For almost half a century, the petrodollar system looked invincible. It powered prosperity so vast that few dared to question it. You were told this was the era of globalization, of free trade, of markets so efficient they could manage themselves. But behind the smooth graphs and glowing GDP figures, the same invisible engine kept humming. Oil priced in dollars, debt priced in faith. The illusion was elegant. Dollars left America to pay for imports, oil, electronics, steel, but they always came back. The same countries that sold America its energy and goods reinvested their surplus into U.S. Treasury bonds, Wall Street stocks, and real estate. It was like throwing a boomerang that always returned heavier than before. The rest of the world earned, America borrowed. The world produced, America consumed. And as long as oil flowed and the dollar dominated, everyone profited. Or so it seemed. In the 1980s and 1990s, this cycle became religion. Wall Street called it the Great Moderation. Economists called it reserve recycling. But in reality, it was the illusion of perpetual motion, money expanding faster than value, debt growing faster than income, and oil serving as the anchor that made it all seem stable. The petrodollar gave America what no empire before it had possessed, the power to print its own tribute. You could see it in the lifestyles, the skyscrapers, the endless credit cards. The world's energy producers, Saudi Arabia, Kuwait, the Emirates, became shareholders of the American dream. Petrodollar wealth funded Manhattan towers, London properties, Swiss accounts. The U.S. military secured oil routes, and oil money secured the U.S. financial system. It was an elegant circle of mutual dependence. The tanks protected the trade routes protected the currency protected the tanks. And it worked. Until it worked too well. When the Soviet Union collapsed in 1991, the dollar stood unchallenged. The IMF, the World Bank, and the U.S. Treasury became the new imperial ministries of finance. Developing nations were told that the path to progress was integration into the dollar system. Open your markets, peg your currency, borrow in dollars, and prosperity will follow. Some did and were rewarded with short-term booms. Others resisted and faced market discipline. The language was financial, but the logic was colonial. By the early 2000s, the petrodollar had evolved into something even larger, a financial ecosystem that could manufacture growth out of thin air. The wars in Iraq and Afghanistan paid with credit. The housing bubble, inflated by global capital recycled from oil-rich reserves. Every crisis became an opportunity for the dollar to tighten its grip, because when fear spread, capital fled to safety, and safety meant U.S. debt. Then came 2008. The system stumbled but didn't fall. The Federal Reserve printed trillions, and somehow the dollar got stronger. Why? Because there was no alternative. Oil still traded in dollars, and every central bank still needed them. The illusion survived, patched, repainted, and renamed quantitative easing. Through the 2010s, the illusion turned digital. Oil was no longer just a commodity. It was collateral for global liquidity. Sovereign funds invested in Silicon Valley, while central banks bought American assets to stabilize their own currencies. The U.S. exported inflation. Others imported dependence. It was no longer about barrels of oil. It was about bites of capital. The petrodollar had become the petronet. But illusions demand belief, and belief demands benefit. As long as the system created wealth, no one asked who paid the bill. The cost was hidden in deindustrialization, in wars justified by stability, in the quiet transfer of real value, energy, labor, materials, for digital claims. America printed promises. The world delivered reality. Look closer and you'll see it mirrored across history. France's assignats in 1790 were backed by confiscated land, Britain's pound by colonial trade, America's dollar by oil. Each system worked until it became self-referential, feeding on its own credit. Every empire believes its paper is different, its era eternal. But arithmetic never sleeps. In the age of illusion, we forgot the simplest rule of money. You can borrow trust, but you can't print it. And when the trust begins to leak, even slightly, the tide that once lifted all ships becomes the undertow that pulls them down. If this cracked open another layer of how the world really worked, drop a comment, tell us where you're watching from, and if your currency still feels safe tonight. Every illusion ends the same way, quietly at first, then all at once. For the petrodollar, the warning signs appeared years before 2025, in trade deficits that no longer mattered, in debt ceilings that stopped being ceilings, in nations whispering about alternatives but afraid to act. Yet arithmetic doesn't negotiate. It just waits. By the early 2020s, the numbers had turned impossible. The United States owed over $34 trillion, more than its annual GDP by a wide margin. Interest payments on that debt began exceeding military spending, a reversal no empire survives for long. Oil producers noticed. They watched as Washington printed trillions during the pandemic, then froze foreign reserves in 2022 to punish Russia. That move, hailed as moral by some, was economically a declaration of financial war. For the first time since 1974, nations realized if your savings are in dollars, they are not yours. That was the spark. Saudi Arabia began experimenting with yuan settlements for Chinese oil. India offered to pay in rupees. Russia turned to gold and digital rubles. Even U.S. allies, the UAE, Indonesia, Brazil, joined pilot systems to trade energy outside the dollar. None of them wanted to attack the U.S. system. They simply wanted insurance against it. But insurance is the first step toward independence. Meanwhile, inside America, inflation returned, not the 2% ghost economists loved, but the stubborn 6 to 8% that corrodes faith. The Federal Reserve had two options: raise interest rates and crush the debt market, or print more and risk the currency. It tried both, one after another, and lost on both fronts. Bonds fell, debt rose, and the world saw what was once unthinkable: U.S. Treasury securities, the cornerstone of global finance, trading like risky assets. The emperor's credit had no clothes. That's when the math broke the politics. The United States could no longer finance its deficits by exporting paper alone. Foreign central banks stopped buying treasuries. Some even began selling. In 2024, China reduced its holdings to the lowest level in 20 years. Japan hesitated. Even oil exporters began diversifying their reserves, quietly converting a portion into gold and local currencies. For the first time in half a century, demand for dollars fell while oil demand rose. The petrodollar's golden symmetry, oil up, dollar up, was broken. Imagine a clockwork mechanism suddenly out of rhythm. Oil sold in currencies America didn't control meant less automatic demand for U.S. debt. Less demand meant higher interest rates. Higher rates meant bigger deficits. Bigger deficits meant more printing and more fear. The feedback loop reversed. What had once been a virtuous circle became a death spiral of debt and distrust. But no one wanted to admit it. Politicians blamed supply chain disruptions. Analysts talked of temporary adjustments. The truth was more ancient. The tribute system had failed. Empires don't fall because they are conquered. They fall because their credit stops circulating. The final fracture wasn't visible on television. It happened in the ledgers. In the moment oil contracts worth billions settled in yuan, bypassing the dollar entirely. It wasn't a coup, it was an exit. The world simply stopped playing by the old rules. By late 2025, the shock reached the surface. The dollar's share of global reserves slipped below 55%, the lowest in modern history. The U.S. could still print, but each new dollar bought less trust than the one before. And like every empire from Rome to London, it discovered too late that power cannot be sustained by printing its symbol. Arithmetic doesn't care about ideology. It doesn't care about alliances. It just counts. And when the count no longer balances, politics follows the math. Look at history. The French assignat, the British pound after Suez, the Spanish silver after the New World. Every monetary empire ends when its promise outgrows its substance. The petrodollar is no different. The moment energy began flowing outside the dollar, the empire of paper met the gravity of reality. If this made the story behind the headlines clearer, write where you're listening from and what currency your faith is still in. When the petrodollar began to fracture, it didn't explode, it dissolved. Like an ice sheet breaking into smaller flows, the world's money system didn't collapse, it multiplied. Each region, each alliance, each bloc began minting its own mirror of what the dollar once represented: trust, trade, and power. But what was once unified under a single currency now turned into a mosaic of competing standards. By 2025, 3 new pillars of value had quietly emerged. The first was the petro-yuan, born of long-term contracts between China and the Gulf. Backed not by ideology but by necessity, it offered stability in trade with Asia, the world's largest energy buyer. The second was the digital gold standard, revived through blockchain-backed vaults in Dubai and Singapore, where nations stored physical reserves and issued electronic claims against them. The third was the energy credit system, pioneered by Russia and Central Asia, where gas, oil, and minerals were priced directly against each other, bypassing both Western banks and SWIFT. At first, Washington dismissed it all as noise. The dollar remains king, said officials on television. And yes, in volume it still was. But beneath the surface, the velocity of trust was shifting. The once stable demand for U.S. debt evaporated. Foreign investors, burned by sanctions and inflation, sought shelter in commodities and local bonds. Even U.S. allies hedged their bets. France repatriated part of its gold. Japan experimented with its own digital yen. The BRICS nations launched payment systems that quietly ignored New York. The irony is painful. The system America built to ensure its dominance ended up teaching the world how to live without it. Every sanction, every frozen reserve, every temporary measure accelerated the exodus. The dollar's strength had been its universality, its neutrality. Once it became a weapon, it lost both. But for ordinary people, the fallout looked different. Prices rose not because oil disappeared, but because the dollar's privilege did. Import costs surged, interest rates stayed volatile, and the old global certainty that U.S. debt was the safest asset became a question mark. Inflation in the West, deflation in the East, and energy priced by multiple standards. A world of financial schizophrenia. The global economy was no longer one orchestra following one conductor. It was a roomful of instruments playing out of sync. Yet, amid the chaos, something remarkable happened. Nations that had been debtors for decades began to breathe. Free from the forced loop of borrowing dollars to buy oil, some found new strength. African and Latin American exporters started pricing resources in local or regional currencies. The Middle East diversified its reserves, investing in infrastructure rather than U.S. bonds. The colonial current of capital, flowing always toward New York and London, began to reverse. Slowly, unevenly, but decisively. And just as in 1931, when the British pound lost its golden chain, the transition came with no grand ceremony. There was no announcement of the dollar's fall. It simply ceased to be the axis of everything. Oil was still sold. Trade continued. But the language of value had changed. Still, the lesson was older than any currency. Systems don't collapse because of malice. They collapse because they refuse to adapt. When one nation monopolizes the medium of exchange for too long, the rest of the world inevitably builds an alternative. The British Empire learned it through sterling. America is learning it through the dollar. And somewhere in the background, arithmetic keeps score. If you're watching this now, understand this is not just about money. It's about sovereignty, about who defines the price of energy, labor, and time. For half a century, that definition came from Washington. Now it's being rewritten in Beijing, Riyadh, and beyond. If this part gave you a clearer lens on what's unfolding, comment below with one word: trust. Because that's the real currency the world is fighting over. Every empire ends the same way, not in fire, but in arithmetic. You can hide inflation with propaganda, disguise debt with diplomacy, even stretch faith with force, but numbers are incorruptible. They are the last honest historians of every civilization. Look around in 2025. Nations are not collapsing. Illusions are. The petrodollar, once the invisible skeleton of the global order, is now just one bone among many. For 50 years, we believed that money could replace value, that paper could replace gold, that promises could replace production. We called it progress. But progress without balance always turns into dependence. When Nixon closed the gold window in 1971, he didn't just end a monetary system, he rewrote the world's moral contract. From that moment, value was no longer tied to something real. It was tied to trust in a single issuer. The petrodollar was that trust institutionalized, a faith that oil and power would keep the equation stable. For a while it did. But every faith becomes fragile when it forgets its limits. Now we see the cycle repeating, not just in America, but everywhere. China prints credit to sustain its exports. Europe subsidizes its bureaucracy. Nations swap currencies and call it sovereignty. Yet underneath, the same question remains. What is your money backed by? Gold, oil, labor, or just the belief that tomorrow someone else will accept it? That's the real meltdown, not of the dollar, but of meaning. Because when money loses its anchor, so does truth. Prices stop measuring value and start measuring fear. Economies turn into theaters, and central banks become their playwrights. We've seen this before, in France's paper assignats, in Britain's war bonds, in Rome's debased denarii. Each generation believes it has outsmarted gravity, that this time the printing press is innovation, not desperation. And each time, arithmetic restores order in its quiet, merciless way. If there's a lesson in the petrodollar's fall, it's this. Power built on trust must protect that trust, not exploit it. America's genius was not its currency, but its credibility. Once it treated the dollar as a weapon instead of a promise, the empire of numbers began to turn on itself. Now the world faces a choice. Either rebuild money on something real, energy, gold, production, cooperation, or repeat the same errors in digital disguise. The blockchain will not save a lie. It will only record it faster. So if you're hearing this, remember, money is not just what we trade, it's what we believe. And belief, once broken, never fully returns. Arithmetic cannot be deceived. If this story made you rethink how value really works, leave a comment and share it. Because understanding this is not about finance. It's about the survival of reason in a world that keeps trying to print reality.